Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Middle of the week, that wobble in US continues, especially on the back of the Magnificent Seven companies. Nasdaq is down once again. So that's, I think, the starting point at least. Markets here fared much better compared to the rest of the Asian region. And the question is, will that continue? That relative day-to-day outperformance continue? I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, morning.
Hi, good morning, folks. Morning, Nigel. Morning, Prashant. I was a little disappointed. My whole theory about the India being the anti-AI trade, we didn't get the FPI follow-through. I would have been very happy seeing about 1,000 crores of buying in cash. Yeah. Didn't get that, but we'll see. But by the way, folks, I mean, such sparks flying in the White House and the Oval Office, including Mr. Trump threatening to ban one of the US television networks. So plenty of masala out there.
Well, that's right. And I don't think you should be too disappointed because yesterday there were a lot of large trades. So maybe that FI buy number is due as well. We remain optimistic.
Absolutely.
And the globe partied all through the year. Maybe the year end belongs to India. I like to be optimistic.
Well, I think in markets you have to be optimistic, right? I mean, there's no point looking at... you've got to be careful, but you've got to stay optimistic. Things perhaps will get better as you go forward. Let's just take a quick look at where we stand, right, as we begin this fresh trading session. We'll start with US, right? So the color is red. US equities were lower and largely led by the technology sector. S&P 0.8% lower, Nasdaq 1.2%. By the way, these final closes were off the intraday lows, both on the S&P and the Nasdaq. And I just want to make one particular point. If you exclude, 4 out of the Magnificent Seven companies out of the picture, I mean, the cuts were about 0.2 to 0.3% on both the Nasdaq and the S&P. So that is essentially how dominant the reaction, price pressure from just 4 out of the 7, not even 7 companies, 4 was. Actually, almost 60% of the S&P companies, S&P 500 companies ended in the green. So, just look at the overall color. It was not as bad. So I think just to make that point as well. Now, NVIDIA was down 2%, another 2%. Amazon is down about ended about 4% lower. And of course, NVIDIA will report numbers post-market tonight. The big talking point about NVIDIA is, will Jensen Huang, the CEO, touch upon that $500 billion revenue guidance, whatever that number which has been spoken about from the data center business. So, I think a fair bit of focus around that. Now, in AI, deals continue. Microsoft and NVIDIA. I mean, just look at this, right? Microsoft and NVIDIA are the biggest backers of OpenAI. Who's the biggest challenger of OpenAI? Anthropic. Microsoft and NVIDIA are committing to invest a combined $15 billion, 10 from NVIDIA, 5 from Microsoft, into Anthropic. And we've spoken about many of these circular deals, and this is one more, because Anthropic is saying that they're going to buy about $30 billion worth of compute capacity from Microsoft's Azure cloud service. Interesting times. Again, on the with regards to AI and product launches, Google launched Gemini 3 overnight, and it looks like it's kind of topping AI performance charts across the board. Lots of conversation chatted around it. Yesterday, while we were trading, most of the crypto coins were all down between 4-5%. Bitcoin was down 5%. And I think it briefly fell below 90,000 levels, but it's come back above. I mean, using Bitcoin for nothing more than just another indicator of what risk sentiment is looking like. It's, of course, pulled back quite a bit from the highs. Macro markets largely quiet. The 10-year lost about 2 basis points. Oil prices up, but up very, very little, 1%. So just under $65 a barrel is where we're at. Just to tie in the levels, I'm just looking at supports here. 20-day both for the Nifty and the Nifty Bank, as we've highlighted. Those numbers have moved a bit. 25,808 is the support for the Nifty, which is the 20-day. The Nifty Bank support is 58,137, again, which is the 20-day moving average for both. On the upside, I mean, the swing highs and the highs for the last 4-5 days, I think those numbers are pretty clear. But the market knows what it has to do. 26,100 is that upper end of the range of the Nifties we put out. So iron supports as we start this session. GIFT Nifty will give you a quick sense of how we likely to start. It's about 20 odd points high. Remember, yesterday was much more quieter as compared to Monday or even Friday for that matter, in terms of broader market and the breadth of the activity, etc. So we'll see if we get a repeat of that or something else. Tonight, after US market closes, when NVIDIA will report, and that's being kind of seen at least as a bit of a pivotal moment for this shakeout in AI trade that we are seeing out there. But that's a big debate, really. It's not here in India, it's outside India. Well, Nigel has now walked across with that F&O statistic and the positioning. Nigel, over to you.
Well, over the last 12 to 18 months, AI has dominated, all the news. It's dominated the earnings. It's taken a large chunk in terms of global indices as well. And now we are seeing some kind of give back from the big rally that we have seen. And it appears India is the anti-AI hedge. And I say that with some data points. The last 5 trading sessions, actually, the Indian markets in dollar terms have outperformed some of these AI-heavy markets, which have done much, much better than India. So the last 5 trading sessions, actually, India's been an outperformer. Can we outperform towards the end of this year? That's the hope. And in fact, I remain optimistic on that front as well. Moving to yesterday's trading session, yes, we ended down. And yes, we outperformed as well the other Asian markets. But I'll tell you what, bulk of that fall came in the final 30 to around 45 minutes, which is telling you the weekly expiry factor did play out. That's why I'm not so worried with regard to the fall that we saw yesterday. If we start off a little bit soft today, we could see a good rebound in today's trading session itself, provided the lower levels do get protected. The FI as well, not too much positioning is what we saw in terms of change in open interest. But if you're looking at the Nifty as well as the Nifty Bank, well, there was unwinding of long positions that we saw on both these two indices. And the FI, since not much moved in the index futures, well, they continue at around 12% long positioning and 88% short positioning. Moving to the absolute terms as well, yes, there are opposite ends of the spectrum, and that's been the case, the FIs as well as the clients. Clients net long, FIs net short. Moving to the options data, this is now for the next series. That's the coming Tuesday as well. You have the 26,000 call. Good amount of open interest build up, and we've seen constant addition at around this 26,000 call or thereabouts. So the call writers, they believe higher levels are going to get protected. However, on the downside as well, the 25,900 put, you saw a good amount of open interest built up, which brings us to the levels itself. So on the upside, the 26,100, 26,150 will be the resistance mark that the bears will look to defend. However, the bulls, they'll fancy their chances that this 25,750 mark could actually be a good entry point. Because the 20 DMA is in that vicinity of around 25,800 or thereabouts. So that's a crucial support. Don't rule out a bounce from the lows in today's trading session. And if that has to happen, then the Nifty Bank, it outperformed yesterday. It's been the index really to go to, and the bulls have been turning to that till the 20 DMA is protected, which is a good 1,000 points or 850 points away from current levels. You'll fancy your chances that this is the one that's going to take the bulls higher. So we'll keep an eye out on that as well. Starting off, I think, a little bit softish or flattish, but going by yesterday's close, maybe some bit of a pullback, and an outperformance could continue for India.
Yeah, perhaps, that can actually happen because Asian markets have stabilized. They had their share of the fall yesterday. Major markets like Japan were down over 3%. Kospi was down 3%. So today, this morning, it's a day of recovery across most of Asia, including markets like Hong Kong and Taiwan for the time being. So let's see if this recovery can last and whether we will be on the upside. Let's pull up the implied open and what it's indicating right now. So yes, more in sync with our neighborhood, 20 points up. That's the indicative start now. Well, before we introduce our first guest on the show, let's tell you about all the latest happenings at the White House. And these are important developments when you talk about geopolitics. Saudi Crown Prince Mohammed bin Salman received a very warm welcome at the White House. President Trump greeted him with a ceremony that featured marching bands, flag-carrying horsemen, and a military flyover as well. The visit emphasizes deepening ties between Riyadh and Washington. This is the Saudi prince's first visit to the U.S. since the 2018 murder of journalist Jamal Khashoggi. Now, addressing the media, Trump said that Saudi Arabia has agreed to invest $600 billion in the U.S. In fact, he's saying that this amount can go up to $1 trillion. And Saudi Arabia has also been designated as a major non-NATO ally. So interesting. And then, of course, lots of interesting exchanges with reporters at the White House. Plenty of sparks flying out there. So let's just hear out the U.S. president describing the relations with Riyadh.
Thank you, because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But it's 600. We can count on 600 billion, but that number could go up a little bit higher. Yes, sir. I don't know. We'll see. But we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. Tonight, I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally, which is something that is very important to them. And I'm just telling you now for the first time because I wanted to keep a little secret for tonight. I just heard him say, "Oh, that's nice." That's another point you won today. And signing a historic strategic defense agreement, which we just signed a little while ago. So congratulations at South Carolina.
Okay, so it's all smiles and hugs out there. Meanwhile, Donald Trump also said that he was speaking with various people about the Federal Reserve chairman's job and had some unexpected candidates on the list of those who might replace Jerome Powell. Take a look.
Started the interviews for the Fed chair.
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And, I mean, frankly, I'd love to get the guy currently in there out right now.
Okay, so it was an action-packed day at the White House for sure yesterday at the Oval Office. Well, let's move on and get back to markets now. We have emerging markets commentator Jeffrey Dennis with us this morning. Mr. Dennis, thanks so much. Always a pleasure having you on the show. So, from our perspective here, while we watch all these parlays that the U.S. is having with other countries, we just want to understand when this deal gets done, because both sides have been talking in a reconciliatory tone, but we are yet to see any specifics. What's your sense on how this is progressing and whether investors can actually look forward to that deal getting done?
With respect to India, I assume you mean, right?
Yes, India and the US, the trade agreement, and knocking off that 50% tariff.
It's difficult for India or getting a deal between the US and India because, of course, of these agricultural sectors that India does not want to open up fully to US exports. And I think that's probably the biggest hurdle that we've got. But ultimately, I think, as with so many other countries, I think a deal will be done. It just, I think it's going to be slightly more complicated than some others, because obviously agriculture is massively important to the Indian economy by definition. And there are certain sectors that are not exactly closed to foreigners, but there are tariffs on those. And I think the Indian government is rather reluctant to open up those sectors to free competition. And so I think that's the big stumbling block. But I would be surprised if we don't get a deal in the next month or two.
Yeah, no, absolutely. And we'd be surprised too, Jeffrey, if something doesn't come through. And of course, I mean, the actual rates also will matter, right? I mean, markets are saying, well, anything between 16 and 18% effective perhaps works, but anything over 20 is going to be not great news, because, I mean, that puts India at a disadvantage relative to others. So, yeah, I mean, we'll see what happens. The big question of our times, Jeffrey, of course, is what's happening in the US, right? NASDAQ is down 7% from its recent highs. And the question is really whether this is a technical shake-off or this is a real rethink in terms of, investor confidence and owning the AI trade. What do you think?
I think it's a partial move down. I don't think it's a massive correction. I certainly don't think it's a February, March 2000 situation. The companies that are under pressure now are in much, much better shape than the companies were at the peak of the dot-com collapse, or the dot-com bubble, I should say. And there are a number of supports here still for markets. I mean, earnings growth has been good. Bond yields are staying pretty stable. The dollar's been pretty stable. And I think that although there are concerns, obviously, about the amount of investment these companies are doing, particularly in data centers, et cetera, and there's all this concern about individual companies investing in other companies who then invest in other companies, et cetera, making this sort of circular investment process, which bothers people a little bit. But at the end of the day, I don't see this as being a major pullback. I think we're probably short-term somewhere near the bottom, probably quite healthy. And I think markets will stabilize in the next few days. We'll probably have a good run up to the end of the year.
All right, Jeffrey, good to see you. And as always, and you have maintained that on the longer term basis, India is the market to go to. But those FI flows, they are missing. A lot of investors like the India story, but they're not showing us the money. The holding of FIs here in the Indian markets is at multi-year lows. Do you think it's time that we gradually see some of that FI money coming back? Because some of these AI-related trades, they're getting a little bit expensive, little over-owned as well. India fundamentally should start looking better as earnings come back. Do you think we should be prepared for the FIs to come back?
I think so. I mean, this is a conversation we've obviously had before, and it's something I've been thinking for quite some time. Now, I think one of the interesting things about what's going on here recently is China's pulled back certainly more than India has done. There are continuing doubts, of course, about the Chinese economy in large chunks of the Chinese economy, in particular, the lack of consumer spending growth in relative terms in the property sector. You've now got this spat between China and Japan as well. So I think some of the heat is coming out a little bit of the Chinese market. That's going to pull money back towards India ultimately. And as you've said already at the start of the program here, in this pullback we've seen in global markets, driven above all by the US, India's been a relative outperformer. Now, you don't get these flows suddenly turning around in over just 3 or 4 days. You probably need to see a period of outperformance here to really drag some of these foreigners back in. But I think this would be exactly the wrong time to get too negative at India. I think there's so much good going on in India. The economy looks in decent shape. The inflation numbers, albeit I'm sure for temporary reasons, partly the food price story, is in tremendous shape, and that possibly gives the RBI the chance to reduce interest rates, etc. You've got some simplification on the tax side. So I do think it's a matter of time potentially, but I wonder what's going to help here is if the China bubble itself starts to blow itself out to a certain extent, and that will, I think, encourage investors back to India. On a 3 to 6 month view, I would much prefer to be in India at this point now than in China.
Great.
All right, Jeffrey, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC-TV18. Well, these are the interactions which are lined up here on the program over the next 2.5 hours. 8:35, we have the management of Gulf Oil Lubricants to discuss their FY27 outlook. We'll have Kumar Rakesh of BNP, and we'll talk about the hike in cost for renewal in the fitness certificate for older vehicles and whether that will have a meaningful impact on new auto demand. Conrad Saldana of New Berger Berman will be with us on markets at 9:20, 9:35. The management of Vinity Organics joins in to break up their September quarter earnings. Vishal Kampani of JM Financial will be speaking with us at 9:45 from the sidelines of the JM conference. And towards the end of the program, Lata in conversation with Neeraj Gambhir of Axis Bank and Anubhuti Sahai of Standard Chartered, the impact of October trade deficit data on the rupee and macros. Well, time for a quick break. Our research team is standing by on the other side. Top stocks to watch out for coming up.
Welcome back. You're tuned in to Bazaar Morning Call on CNBC TV18. As promised, let's invite our first management. We have Gulf Oil Lubricants. That's the first management on the show. Remember, they reported a strong set of numbers in Q2. Volume growth came in at around 15%. In fact, their EV charging subsidiary, Tyrex, the revenue out there surged more than 70%, came in at ballpark around 40 crores. To discuss this and how's the outlook for the second half of the year, we have Manish Gangwal, the Chief Financial Officer at Gulf Oil Lubricants, who joins in. Hi, Manish. Good morning. Good to see you in as always. Well, let's talk a little bit about the past quarter's numbers. 15% volume growth, that's good. Revenue growth, however, was only around 12%. What's the reason for that? Was there some kind of pricing pressure? If you could help us out with that, pricing pressure in the past quarter. And what is the volume growth for the year? And also on margins, it was impacted due to the rupee depreciation. What's the margin guidance for the year? Volumes, pricing, and margins. Go ahead.
Good morning, Prashant. Always pleasure talking to you and Nigel. So our overall core lubricant volume growth has been, 9.5%. And there is a category called AdBlue that grew 24%. So overall, you are looking at a number of 15%. But AdBlue is a lower price, more of a commodity item. So our core lubricant is what is really comparable, and that's 9.5%. Against that, we have grown our revenues by nearly 13%. So there is an improvement in the product mix, and there is an improvement in the realization, leading to a 13% revenue growth on a 9.5% volume growth.
Oh.
So that's the right comparison from volume and revenue perspective. And of course, coming to your second part of margins, crude was very stable during the quarter, but foreign exchange, the rupee depreciated sharply in the quarter July to September, and that too led to an increase in the input cost, blended input cost. Please remember, we import nearly 70% of our raw materials, and that's why there was some pressure on the margin side. We have taken pricing calls selectively in certain segments and try to pass on. But there is some time lag between when you realize fully the price increases. So overall, from margin perspective, rupee played slightly negative on the margins. Mm-hmm. But overall, on volume side, fantastic double-digit growth, and revenue growth was also quite double-digit.
So you're saying that, for the year, we should be working with mid-teens volume growth. Would that be fair? And margins holding at around this 12-13% mark?
So typically, we grow 2 to 3 years the industry. Industry of lubricant grows 3 to 4%. And we have been growing double-digit, near double-digit. So our core lubricant growth, we continue to maintain that we should end the year at double-digit volume growth.
Okay.
And AdBlue, of course, is a factor which we are also trying to grow nearly 10 to 15%. So on volume side, yes, double-digit volume and revenue growth.
But double-digit, sir, double-digit when you say, some more color. I mean, are we talking about the high teens, or is it going to be closer to the, 10-11% mark? What's the sense on volume growth and then overall revenue growth as well? Because this quarter, what the issue was that your volumes were growing, but the revenue growth was not, in the same clip. So what should we expect for H2?
So as I explained, Bharti, our volume growth was 9.5% in core lubricant. And we grew our revenue by 13%, which was higher than the volume growth. And overall, we believe that since the industry is growing 3% to 4%, and we grow usually 2 to 3x, we maintain around, high single digit to 10 to 12% volume growth for the year. That's what our projection is for the full year.
Got it. All right. Let's focus on another smaller part of your business, which is growing very, very well. Tyrex. What's the revenue guidance for the year? If you could give us a ballpark number. I think for the first half of the year, you've already done close to around 68 crores in terms of top line. Last quarter was good, 40 crores or thereabouts. For the year, what do you aim at doing? And is it profitable?
Sorry.
Tyrex.
No,
Question on Tyrex.
Yeah, on Tyrex, you see, we have grown 75% in H1 on the revenue side. So H1 revenue was 42 crores. And last year we had closed the year at 80 crores. It's a very fast growing segment. We have acquired this company, Tyrex Transmission, which is based out of Ahmedabad. We increased our stake actually during the quarter, and we have completed that transaction. Now we hold 65% in Tyrex. And we believe that this company is poised for a very fast growth. And of course, for the year, we are aiming to cross above 100 crore in terms of revenue for sure. But on a near medium term basis, we believe that this company can touch 300 to 400 crore revenue in next 3 to 4 years.
3 to 400 crores. And will you go ahead and increase stake? I think you mentioned it's 65%. Will you want to go the entire hog and, buy the entire 100%?
See, we have all the offer clauses, but founders are running the company. They have been, instrumental in technology, and they have made this company where it is. So we are continuing to work with them, but we have all the clauses at appropriate time to exercise.
Mr. Gangwal, hi. Morning, Prashant here. Lubricants and the business of AI and data centers has been this talking point. I remember having this conversation with Mr. Chawla, and he had indicated that you're working on, I guess, 2 products, right, for data center cooling. and as an opportunity size. Any update there? Is something happening? Because of course things there are moving so rapidly. The spends are mind-boggling. So in terms of cooling, of course, is an important constituent of all of this. So any update you can share with us?
No, so I think you're right. We have 2 products already in the pipeline, and we are looking for a POC to be done on those. You see, we have been of the opinion always that data center, while it's an interesting segment going forward, but from the size of the market perspective, it is going to be less than 1 to 2% of the total lubricant market, even at its peak, when every data center is liquid cooled as against air cooled, which is a very unlikely scenario. The overall volume impact is going to be very, very minimum from the industry perspective. But yes, this is a futuristic product, and we are looking for a POC. India, as per our understanding currently, is not moving very rapidly in terms of liquid cooling data centers. But yes, there is a perspective for future, which we are already trying to, get the POC done at 1 or 2 places.
Okay, proof of concept, basically, right? So 2 products and got that. But fair enough. We'll leave it there and wish you all the best of luck. But good conversation, Mr. Gangwal. Thank you very much for joining us here on CNBC-TV18. So that's the overall picture with regards to Gulf Oil Lubricants. We'll take a quick commercial break here. Devin Choksi of DR Choksi FinServ with some fundamental conversation, specific stocks, etc. in focus. Welcome back. I think, 15 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers, which we saw yesterday, volumes, etc. behind the price action itself. Hormuz, take it away. Morning.
Morning, Prashant. And the focus, the spotlight has been on these new listings, and you'll put the spotlight on them. There was PhysicsWallah listed yesterday, so of course the trading volumes were on the higher side. Almost 28 crore shares were traded, and a third of that, almost 8.5 crore shares were marked for delivery on their trading debut for PhysicsWallah. But as we were mentioning yesterday as well, for the other names like Grove or Lenskart, even if the trading volumes are higher, the delivery percentage is significantly lower, and that possibly also explains why shares of Grove were in the auction yesterday. Grove had almost 50 crore shares traded yesterday. Almost 6 crore shares marked for delivery. Lenskart too, close to 70 lakh shares were traded. Only 15 lakh of those were marked for delivery. And Urban Company too, close to 1 crore shares were traded. 35 lakh of those were marked for delivery. Now, Sequent Scientific was the other mover yesterday among the top gainers on the small cap index. It has gained in 6 out of the last 7 sessions, which has moved almost 15% during this period. The volumes yesterday were the highest since September of last year. But if you look at the trading activity during the 7-day streak that Sequent Scientific has had, the average daily traded volume is almost 35 lakh during the 7-day period. Compare that to the prior 3 months, that volume is only 10 lakh shares. And yesterday, close to 91 lakh shares were traded. The 20-day average is only 15 lakh. And 30 lakh shares of those, was 1/3 of the traded volume, was marked for delivery compared to the 20-day average of just 7 lakh shares. Keynes Technologies were under pressure yesterday after the lock-in period came to an end. Volumes yesterday were the highest in 4 months. Almost 32 lakh shares were traded. 20-day average is only 4.5 lakh. And 12.5 lakh shares were marked for delivery. Here too, the 20-day average is only 1.5 lakh. And the stock has corrected significantly, also 25% now lower than its 52-week high. And lastly, Ugro Capital is a third straight day of gains yesterday. We spoke about this during closing. Volumes yesterday were the highest since July of 23. And yesterday's volumes were the sum total of the last 30 sessions put together, with 72 lakh shares traded. The 20-day average is only 1.5 lakh. And here almost 32 lakh shares were marked for delivery. The 20-day average here is less than 1 lakh. So gaining on substantial volumes yesterday was Ugro Capital.
Okay, all right. So we'll keep a lot of these names in mind as well. Thank you very much for that, Hormuz, for all the trading details. We're just about 15 minutes away from getting our pre-open rates. And the indication is that, like Asia, we'll probably have a soft start, a muted start. Oh, some of the Asian markets have actually changed color. Let me see the others as well, if that's true for markets like South Korea and Japan, because they all were bucking the weak trend otherwise. Japan's still up, but yeah, the Hong Kong market has turned negative. So let's see if we can continue our momentum, because the market managed to buck the overall weakness yesterday. But no, even the implied open has turned slightly negative now. So we'll talk more about this with our technical experts as we go forward. I think we have them actually. Yeah, we have them with us. So good time to bring in Sudarshan Sakhani as well as Mitesh Thakkar. Gentlemen, great to have you on. Good morning to both of you. Sudarshan, how would you read into this? The fact that we didn't fall as much as the other Asian markets, does it indicate strength? So are you a buyer on dips, or is the market, till there's clarity, is the market, at least at the index level, are we in a no-trade zone?
Good morning. No, I'm a buyer on dips. There are two facts. One is, of course, that we were outperforming, relative outperformance of the other markets as compared to the other markets. And the second is that this is a seasonally bullish period for India, November and December. And we are coming out of a 6-month consolidation. You know, once this breakout of a 6-month consolidation happens, the market could go up like a rocket. I mean, it's all possibilities. But I'm upbeat, and the dip is a buy.
Okay. All right. Dip is the buy. Got that, Sudarshan. Mitesh, what about you? What do you believe? The Indian markets, I just put out some data. In the last 5 sessions, India has actually outperformed, which is a bit of a rarity. In dollar terms as well, we are mildly higher, while a lot of our Asian counterparts, they're actually down 3 to 5%. You think we can outperform from here as well?
We can outperform, yes, but the reason could be the fact that the rest of the global markets could decline, and India could possibly consolidate. My belief is that the Nifty might be forming a range, and these are early signs, but I think it looks a strong possibility. 26,100 to about 25,750 broadly, give and take a few points, I think is the range which the indices might, which the Nifty index might enter. The Bank Nifty is still looking good and strong, and as long as it's above 58,600, 500 zones, I would be positive over there. So in that sense, a worry of a breakdown may not happen, and that's why we might actually, end up outperforming the rest of Asia, or maybe the rest of the world.
Okay, so that's at the index level. Let's talk stocks as well. Mitesh, morning to you. What's on your list today?
Yeah. On the list, I have a mix of buys and sells. I have 2 buys to about 2 sell calls. On the buying side is Bharti Airtel. It's been making it's been making new highs, and the stock remains very strong in terms of outperformance to the other stocks as well. So buy here with a stop at 21.29 for a near-term target of 21.90. After a long time, Siemens comes on the buying side. It had a breakout day before yesterday. Yesterday was good kind of continuation signals. The indicators are positive. So buy with a stop below 3,200 for targets of 3,350. Couple of sell calls. DLF is a sell with a stop at 763 for targets of 725. And Bajaj Finserv is a sell with a stop at 2067 for targets of 2015.
Okay, got that. Thanks for that, Mitesh. Sudarshan, what about you?
Well, I continue to have an all-buy list. AU Bank is a buy with a stop under 905. JSL is a buying opportunity with a stop under 735. Voltas, which comes in my list after a long time, is a buy with a stop under 1360. And ICICI General Insurance, ICICI GI, is the last buying opportunity in my list that is last. 1990 is the stop loss. I would prefer to be on the long side in this market.
Okay, all right, got that. Gentlemen, thanks very much. We'll come back to you for some final trading calls a little closer to market opening. Right now, a break. And when we come back, we'll of course have the pre-opening rates. We'll also connect with Kumar Rakesh of BNP Paribas. The government has hiked vehicle fitness test fees for all vehicles. So we'll try and figure out what that means, if anything, if it can add as a bit of a kicker to auto demand growth. Also, Deven Choksi is going to be joining in.
Okay, well, I think you've got about 5 minutes to go for the pre-open session to kick off at this point in time. Deven Choksi is with us, Managing Director at DR Choksi Finserv. Deven, good to have you with us here. Thank you very much for joining us. what kind of activity at your desks have you been seeing on Grow, if you've kind of seen any kind of activity? Money Control put that story out that a lot of people tried to short it initially as soon as it listed because it had run up in cash. I guess couldn't cover during the day, and then those shares have gone into auction. So maybe that also perhaps responsible for some amount of short squeeze. Float, of course, is limited in any case. But just your thoughts here, Devin.
Yes, Prashant. Good morning. I think largely due to what you explained, I think technical reasons, I think for which I think the stock pricing is on fire. Some of the funds definitely, I think, are keeping a good amount of space for adding some of the consumer tech companies, fintech companies, ad tech companies within that. I think they try and create that particular portfolio for themselves. And that's a reason for which initial demand post-listing started coming in. To my mind, I think the valuation-wise, everything is in price. Even if you look at last year's profit, and even if you have to assume that I think this year it will be double from what it was last year, which is about 3,500 crore. On a market cap of around close to 110,000 crore, I think you're talking about already 3.25% kind of a yield, I think, that you get on this kind of a profit. So frankly, I believe that everything is in price. It's a costly affair right now at this point of time. Maybe short squeeze related issues as the channel has reported. I believe that I think could possibly subside at some point of time. One will have to wait and see how the valuation plays fair. Then only I think one can look at such businesses from adding into the portfolio.
Okay, all right. Point well taken, Deven. And, I think there is that float issue as well. You have a large amount, close to 59-60% is with institutions, promoters at around 28%. So you have 90% between them. And from the public holding as well, there is, some part of that, which is, again, you have the unclaimed shares, which are another 5.6%. So effectively, there is only 4 to 5% shares that are in the open market. So float is limited. That could be another factor at play. That said, let's talk about a few more companies then, Deven. KC. That could be the stock in focus because late last night at around 10 p.m., they put out on the exchanges that, they're not going to be able to, they're barred from new power grid projects for a span of around 9 months. Now, the current order book doesn't get impacted, but the street will be a little bit cautious because of this barring for the next 9 months with regard to power grid contracts. And back of the envelope calculation suggests that maybe, in fact, T&D is approximately 60% of their order book. And 50% of that is domestic. And a large part of the domestic part could be coming in from power grid. That's in the order book that is not affected. But this will be a sentimental hit. What would you do? Would you look to buy the stock if it opens up weak?
Good morning, Nigel. Well, not too sure immediately because we haven't done the impact analysis of, I think, how exactly is going to play out. And neither we have, I think, followed the sentiments at this point of time. So we'll probably wait before, I think, making any call or taking any call like this.
Okay. All right. Got that. Let's focus on a couple of other names then. Let's talk about the auto pack. Some of those auto ancillaries actually have started doing very, very well. I was looking at a chart of FIAM, that's done well. LG Balakrishna has done well. Beg your pardon on that one. You have Lumax as well, that's done very, very well. Motherson, they came on the channel and they sounded very optimistic. Anything you like from the auto ancillaries pack?
Yes, I think this is the pack, I think, which probably would look relatively more stable going forward as well. Because on commercial vehicle side also, the new demand getting generated. On the passenger vehicle side, of course, I think with a higher amount of money in hands of people with a lower cost of interest, I think you're seeing a good demand coming in as well for passenger vehicles. And ancillaries are right in place. Some of the ancillaries which are basically also applying into the electric vehicle space, where probably I think either in the space, I think where ADAS is operated or where infotainment is operated, companies are coming up with the newer product lines, and that could possibly be a larger one. Because I think today in any vehicle, 45 to 55% kind of a value comes out of the electronics. And some of these companies like Minda Corp, Minda, those companies they have, I think, a significant amount of new product development in their R&D, which probably suggests that they are looking relatively good from the long-term perspective, of course, but I think in near term also playing a very solid role with some of the OEMs. So we like few companies from investment perspective. The tailwind is very, very strong as far as this business is concerned.
Absolutely. Devin, any thoughts on LG Electronics with the recent listing? It's gone sideways post-listing. Two initiations with slightly higher price targets. I think this Morgan and one more. Any thoughts here?
So we love the company, the kind of distribution reach that they have created, the product line that they have, and the backward integration that they are putting in. Definitely suggests that the business is going to possibly produce better profit than before, and a sizably good one. But the fact remains that everything is in price. Today, the valuations are not suggesting that one should get immediately into it. Maybe post-listing, many companies, they find the institutional investors in order to fill up their books. They buy at a higher valuation. And that's where probably I think you're not getting them cheap. In my viewpoint, I think it's worth waiting for some time before adding a fresh into the portfolio. Not expecting, I think, major or sharp correction, but even if I think the market gives you a sideways some time correction, and with some price correction of around 10% or so, could be once again becoming a good case to add into the portfolio.
Okay, all right. Devin, yesterday we saw a lot of large trades. Keynes Technology was down 5%. There was a lock-in that opened up. Motilal Oswal went ahead and sold. You had Paytm as well that was under some pressure because there was a large trade that took place out there. And Emphasis as well was another one. So, sometimes once these large trades get out of the way, the stock continues to move according to the fundamentals. Any of these three you like? All three of them were under pressure yesterday, whether it was Emphasis, whether it was, Paytm, or even Keynes Technology.
Not really, I think, Nigel, because as we see, most of the portfolios are getting reshuffled. Some of the tech companies which I'm mentioning, likes of Paytm, I think those companies are basically being shifted out of the portfolio by some of the fund investors and are getting into some of the other ones, like newly listed ones like Grow and other stuff. So frankly, I think it's a portfolio shift which is happening. And as you rightly observed, I think the post-listing scenario now, when some of the market investor goes out, you see the earnings coming back onto the real terms, that is on the core strength of the fundamentals. Today, I think the market technicals are getting out of the way from as far as these companies are concerned. So as far as I think I am concerned, I think let the price acceleration take place in some of these counters, after which I think one can relatively look at them afresh as far as business is concerned. Business model may be good, but the valuation probably needs to come down to get rationalized. Then it is a better opportunity.
Devin, just two other sort of stocks, right? GMR Airports. There's Sudarshan was telling us that there is Intersay kind of, not Intersay, but basically transfer GQG. His name showed up, but basically it's transfer from one fund to the other, one scheme to the other. So it's not fresh purchase in that sense. If you have any thoughts, stock was up sharply. GMR Airport over 100 rupees now. And if you look at Piramal Finance, I mean, after post the demerger, from 1250 to wherever it is now, 1600 plus. Any thoughts here? 1700 plus. Devin.
So I think in general, I think this particular business, airport business proposition becoming very, very strong. In fact, I think under the new Udaan scheme also, I think some of the smaller airports also attracting larger amount of traffic. I think that works very well. Likes of GMR and even Yada airports, I think they are basically calling a significant large amount of passenger traffic and cash flow generating model as far as I think the infrastructure play we want to consider that as. In my viewpoint, I think the companies are relatively good. Not too sure whether I think they're worthy adding into the portfolio immediately. But yes, GMR looks, I think, relatively more decent than what it used to be. More stable, rather, I would call it, now to add into the portfolio.
Yeah, no, absolutely. Devin, thank you very much for joining us. Good speaking with you. And it's a pleasure speaking with you, as always. Now, the government has amended the Central Motor Vehicles rules and has increased the fee for fitness tests of vehicles across the country by up to 10 times, especially in the case of commercial vehicles. To discuss, this more and, of course, also get a bit of a check across the board. I mean, in terms of whether this GST fuel demand is, sustaining as we go into the second half of November and beyond, is Kumar Rakesh, India analyst, auto and IT at BNP Paribas. Kumar, good to have you with us here. Good morning. Prashant this side. So the first part, which is this, the hike in fee to get a fitness certificate beyond 15 years, is it material and how do you see it?
Hi, good morning, Prashant, and thank you for having me on the show. So we have seen the scrappage policy being implemented for a few years now, but since it's a voluntary implementation, we haven't seen a dramatic increase in terms of scrappage or new vehicle demand since then. So this is hopefully helps in driving more of scrappage happening in the country and incrementally driving more positive demand for the new vehicle purchase. That being said, in the last few months, we have started seeing positive indication for the new demand to start coming in. We believe that we have largely crossed the trough of the commercial vehicle, at least the heavy commercial vehicle industry. We have started seeing diesel demand picking up. The freight rate has been holding up pretty well. There are multiple indicators which are indicating that we should start seeing improved demand in the coming months. Last month or two have been promising. The base is also relatively lower for the last financial year, and hence we should start seeing better volume growth for the heavy commercial vehicle. Light commercial vehicle benefits from the GST rate as well, and that is something also which has started seeing improved demand in the last few weeks. So both the segments of commercial vehicles should start seeing an improvement in demand from here on.
Kumar, hi. So, various governments, center and mostly center actually, I'm not so sure about states, but there have been policies to try and discourage use of vehicles for too long. Basically scrappage, right? The scrappage policy itself, and now the fitness certificate renewal is going to get that much more expensive. Do you think these end up being triggers for additional demand? And if yes, then this latest move that we've seen, do you think that could give somewhat of a small, fillip here or there?
So there are a couple of aspects to that. First is we still have pretty old vehicles on the road, BS3 vehicles as well on the road, which are really polluting. The emission standards of those vehicles to start with were pretty lenient. And now that these vehicles are 15, 20 years old, anyways, their emission would have significantly increased. And hence to control emission, it's a fair policy move to promote more people to move into the new emission vehicles. And these are of global standard in terms of emission and would hopefully help in reducing the emission overall. And that's why from a broader policy perspective, it seems like a move in the right direction. Would it help in driving new demand? I think that is consequential, not necessarily the key reason why these policy would be getting implemented. But definitely we would expect that to have a positive effect on demand because the average age of vehicles we have been seeing in the country continuously rising up. And that is definitely not positive for the new vehicle demand. And that as we start seeing some containment on the average age of vehicles increasing, new emission norm vehicles coming into the fleet, that should be positive for the new vehicle demand.
Okay, so let's boil it down to stocks. Now that we've seen the post-GST festive bump that's over and done, from here on, purely in terms of growth, on the PV side, first of all, which are the stocks that will outperform? Just throw in a word on Tata Motors PV. I mean, it was a total washout quarter, right? So painful for the local business, for JLR as well. For the local business for Tata Motors PV, is that a short-term phenomena, maybe one bad quarter, or are there bigger issues at play here?
So most of the auto companies' September quarter result didn't had any benefit of GST rate reduction, just a few weeks or so. So the bulk of the benefit will start showing up from the December quarter results onwards. And that is what the street and we would be focusing on, is that if there is a sustained recovery in demand, A, that is the first thing to watch out for. B, if there is a sustained recovery in demand, is that translating into better margin of these companies or not? Some of the companies have indicated that it should. The other companies usually do not speak about it. We would still be expecting them to start seeing a margin expansion. So that brings us down to that from stock perspective, what is already priced in and what is not. If you see, many of the passenger vehicle stocks have done reasonably well post GST rate reduction, especially stocks like Maruti. But earnings upgrade has been only about 6 to 8% or in that ballpark. We think if there is a price elasticity of 1.5 to 2 times and there is margin expansion, the earnings upgrade should be about mid. So we think there is still more room left for earnings upgrade to play out. The catalyst for this would be the sustenance of the recent strong demand and margin expansion. And if those two things keep on playing out in the coming months and quarter result, we would expect more earnings upgrade. And if that is happening, we would expect a positive momentum on the valuation side as well, because there is a general shift towards consumption in the country. And auto within the consumption pack is one of the few places which is showing the strong growth, while the rest of the back is largely an expectation. And hence, we would expect this sector to have a better valuation multiple as well.
Okay, all right. So passenger vehicles, particularly stocks like Maruti, you're saying maybe there are more upsides if we keep getting a re-rating on the earnings front. A little short on time, so we can't discuss the two-wheelers. We'll leave that for another day. Kumar, thanks very much for joining in. You have a great session going forward. Well, with that, let's quickly revisit the screen now that the pre-open session has settled and get back to our final trades. It's very flat, so quiet. Nifty is not doing anything at all for the time being. Just pull up KEC International. There's negative news flow around KEC because they have been barred from bidding for any future power grid contracts. This goes back to an issue, which came up to light about 7-8 months back, allegations of bribery. But anyway, it's for future contracts and not the current contracts that KEC is executing for power grid. That stock's down about 4.5%. Let's go to our experts for final trading area. Sudarshan, which stock?
It's AU Bank. Buy AU Bank with a stop under 905.
And Mitesh?
We'll go with a negative call on DLF, sell for targets of 715.
Okay. So, got that, gentlemen. Thanks very much. With that, let's get to Nimesh. A lot of interesting brokerage notes out today. Let's see which one Nimesh has picked out for us. So, which one is the standout brokerage call, Nimesh?
Hi, sir. Today's standout is on private bank names. An interesting report from UBS. They've today upgraded Axis Bank to a buy from neutral and a contra sell call on IDFC First Bank. So, they've downgraded to sell now. Coming to Axis Bank first, UBS has today raised the target price on Axis Bank to 1,500 versus 1,300 earlier. They believe that the credit cost is on a gradual decline and easing pressure on liabilities is going to help support the loan growth. So UBS is expecting a loan growth of 14 to 15% for Axis Bank between FY26 to FY27, ROE of nearly 1.7% and ROE of almost 15% over FY26 to FY28. And they believe that valuation is quite reasonable at 1.5 times price to book on FY27. It's basically on a discount to all of the other private bank peers. And management has actually said that they expect a better second half. So expect a gradual recovery in earnings, and that will lead to a re-rating. That's the call from UBS and Axis Bank. Coming to IDFC First Bank, as I said, it looks like a contra sell call from UBS. I haven't seen any sell call post they raised money a couple of quarters back. So a downgrade to a sell, target price cut to 75 from 80. And UBS says that the credit cost is likely to see a limited improvement because of the risk in the SME segment. In fact, valuation also wise, it's an expensive bet at 1.4 times on FY27 price to book. And they've cut the EPS estimates as well. So a bit of a contra sell call on IDFC First Bank, but a big upgrade on Axis Bank with target price raising now to 1,500.
Okay, all right. Nimesh, thank you very much for that. So interesting banking calls coming in from UBS. We'll keep those stocks on the radar. By the way, before we get to the open, so KEC is one stock you want to watch out for. The other is Wari Energies. And that's on the back of these so-called, questions from the IT department. I'm not calling it raids, but there was some back and forth and some questions raised by the income tax department. Wari is down 5.5%, at least in the pre-open.
No, absolutely. And, market open, right? Coming up in just a bit, about a minute or so to go. Under that, 8 points, so flattish on the Nifty. The sensex is down about, 30-odd points. And we look at individual stocks as we go along. Should we look at Grow again? I guess we should, where it is in the pre-open. And then we'll move forward with the opening. So
It's quiet, finally. It's 0.5% lower, Grow today.
Okay, all right. So the market, I think, should be, at least the word go, should be quiet as well. And then we'll, I guess, pick up on action through the course of the day. The pre-open is certainly indicating that. What do we have? First rates, 25,900 on the Nifty. Nifty Bank is down 0.1. The Sensex is flat. The small cap index is flat. The mid cap index, I think, is also not doing very much at all. So 840 stocks are higher, 700 stocks are lower. That's the advanced decline ratio, which is coming up on your screens. Nifty 50 heat map will give you a sense, I guess, should be kind of balanced with more down than up. But what do we have? Yeah, so just about 6-7 names are higher. Everything else is starting in the red. Lever is up, Infi is up, TCS is up. But otherwise, it's mostly in the negative territory. Nothing very large on the downside, I guess, but it's in the red. Surabhi.
Yeah, so let's talk about some of these red stocks for the time being. BEL, Tata Motors, Max Healthcare, Eternal, Eicher Motors. No patterns or trends in terms of sectors right now. In general, some profit taking, that's what we're seeing. Hindalco and ITC and Cipla, some of the other names. What's up is HUL, 1%. Remember, they've got all the approvals and that whole process of demerging the ice cream business. That's of course underway. Infosys and TCS along with Wipro. So Indian IT is seeing some buying this morning. Shriram Finance is up and about, which brings me to the financials. Let's pull up Axis Bank, right? The call that UBS has given. They're expecting 20% upside on the stock. The target is 1,500. Right now, the stock's not reacting too much to it. 1265 on Axis Bank. That's about it, really. Trent, well, hardly anything. It's just IT and HUL. Those are the leaders on the Nifty. Nigel.
Well, Azad Engineering, that's a stock that's going up on good volumes. It's up close to 4%. I think they got a new order, green signal out there. So that's why that stock is up close to 4%. KC getting smacked, Vari getting smacked. KC because of that uncertainty with regard to what's going to happen on the way ahead. Though the current order book doesn't get impacted, but the stock is down 6.5%. Vari, as you mentioned, that as well is lower. The stocks that are gaining from the broader markets, just keep an eye out on Infra. That's up more than 6%, and volumes for the first few minutes are more than 65,000 shares. So it appears, there's pretty high volumes for a counter like this. Big up move is what we're seeing on that particular counter. So keep an eye out on that name. Billionaire or Billion Brain, Grow. That one's down close to around 6%. So now it's at the low point of the day. And Physics Wala as well, it started off with a pop of around 2%. It's quickly corrected into the red. So, gravity is catching up with these two, looks like. A bit of a downtake on them. Cupid from the broader markets is up 3.5%. Big up move is what we're seeing. And MV, photovoltaic, yesterday it listed. The stock ended a little bit flattish and mildly in the red. Today it's up close to around 2%. Volume's quite high on that name. So a flattish to a mildly negative start is what we're seeing.
Absolutely. So sideways, basically, right? The word goes. 1,200 stocks are lower, 1,000 stocks are higher. That's the lay of the land. Actually, lots of stocks opening up right out of the gates with actually more down than up. Yesterday as well, more down than up. But yesterday was quiet, quieter compared to what we had on Monday's trading session. Intellect Design is something which is up 4%. It's got very large volumes. Hero MotoCorp is the number one volume-led gainer. I think there's an upgrade from one of the brokers, I think JP Morgan. So they've raised price targets in their view of the stock. KRN is up, 4.5%. Goldium International, the lab-grown diamond maker, 6% higher. Studs, I think this is the helmet maker, right?
Yes.
Studs had a big move yesterday. So it's up another, 3.5% this morning. We've got Deepak Fertilizer up 2.5%. And so it goes. Basically, just about opening up, but with very, very kind of sort of quiet kind of vibes this morning. 25,875 is where the index is opening up. Conrad Saldana is Managing Director and Portfolio Manager, New Berman. He's with us here in our studios. Conrad, great to have you with us here. Thanks very much for joining us. So, I guess some of the stuff is similar to when we've spoken earlier, which is the India-US deal is still happening, but not yet. And the AI thing, NASDAQ is down about 7% from the high. So let's just actually start with the US and your view on things. Do you believe it's just a technical shakeout at the end of the year? Protecting profits, that kind of thing, or this is a turn in sentiment? Because if it's a turn in sentiment and people are now fearful to own the AI stocks because of fundamental reasons, now that's a bigger problem. What's your sense?
A difficult one to call. We think long-term here now. Even coming to India, for me, there's so many AI bubble headlines, and people on the other side of it and trying to justify it. I think this is here to stay. This is real. Now, saying that, we've got NVIDIA's results, right? There's going to be well watched for in the next day or so. Tonight for us. I'm getting my time zones mixed up. But that's going to be one to watch in terms of growth. But I do think the ramp up in AI is still here to stay. You're seeing tons on the GPU side. We haven't seen fully the ramp up in ASICs, and enterprise spending hasn't really come through. So I think part of that, I think people might be a little bit ahead of themselves. I'm not saying that there aren't pockets of where there's euphoria and the fundamentals are quite not there, especially cash flow. But you look at the NVIDIAs of the world, there's plenty. Broadcom, they're cash-generating machines. Gross margins are super high. You're talking these businesses that are 70+%. Those are great businesses. And people question where they're deploying their capital potentially now, but I think they're building the whole ecosystem. I still think we're early innings in that. Valuations is something you've got to keep an eye on. And as fundamental investors, that's our challenge, right? And we have to pick those points. But otherwise, I don't see a broader bubble. There are pockets of that do happen. But I do think where there's, Surbhi, I know you're laughing at this, but I think there's profitless companies that are building out, right? And you're seeing with the computing power that's happening with every generation shift that we've seen from Hopper to Blackwell now to Rubin, you're seeing the cost of the cost per token come down so drastically. But there are people who make money off the tokens too.
I was laughing, Conrad, because Prashant and I keep a tracker. Is it a bubble tracker, right? And the overwhelming consensus right now is that it's not a bubble. Okay. So,
ignore those headlines, because those are SEO optimized headlines, Conrad, which is, when bubble gets you hits. Yeah. But I don't think, Surbhi is absolutely right. I mean, look at all the mainstream sell-side research, right? Yeah.
Everyone's saying it's not a bubble.
Everyone's asked the question.
Is that the risk? Because everyone says it's not a bubble.
Yeah, I think there are definitely pockets of it, right? And valuations are not what they are. But you look out a year out with even NVIDIA, you're talking if it's a 30 PE stock, that's not egregious, right? Now, you can find loss-making businesses on the rental side as you go down the curve. How much, people question OpenAI, how much are they spending, right? But their tokens are just turning profitable, right? Now, would that spending slow down? It's been a big driver for US GDP growth too, keep in mind, right? Yeah. All this tariff, all this other stuff gets pushed aside because you've seen that growth come through in Q2, et cetera. So that's helped the economy as well in a reasonable way.
Conrad, so that's the global AI theme. Yes. So now I just want to ask you an India question. We don't have clear AI plays in India, but we have consumer tech, and we have these new companies that are disrupting.
I thought you were going to ask anti-AI.
No, anti-AI is for later. I'm asking something.
That's the new terminology.
We're the anti-AI.
Actually, it's not. It's. Go on. Sorry, we'll get to it.
But that later, whether we are the consensus anti-AI trade of the world or not, that later. But actually, my question was a little more serious about corporates. So we don't have these deep technology companies and these AI companies. What we have is consumer technology, right? We have platform companies, and we have, whether it's brokers, whether it's food delivery, and all of them based on the digital theme. And these stocks are getting top dollar valuations. Many of them are listing, and one example obviously is Grow. I don't know if you've seen it or not. But I mean, this is not a stock-specific buy or sell question. Does that, does that make you uncomfortable at any level? Is it that we lack AI, and therefore any company which has anything to do with digital otherwise is just getting bit through the roof here in India? Is that a worrisome sign?
But potentially, I mean, some of those, I would say what's happening on the hardware side, right, looks like it is going to be disruptive on the software side, right? And what OpenAI is doing, and you're seeing the valuation differential globally, that trend. Now, India has been a net loser in a sense. IT service companies, more time and material. If you can automate, and the workload that took you 3 weeks to code takes you 3 days, there's obviously a risk factor, right, on your billing. Now, the Indian companies will have to disrupt themselves, right? And the old business model that they've had for the longest time has to change. Are some of the companies actually going to be big beneficiaries? I think so in India, where efficiencies, can be massively improved. I think there's a broader spend. It's super early days right now. When you look at the AI DC spend here, if NVIDIA is thinking and talking about 1 gigawatt in India, that's really scratching the surface, right? So I think it is a big runway for India for sure. There's going to be disruption. People worry about the social aspects of it on the job front, right? And IT was a big job creator. Is that lull and pause now? To be honest, if I look at the US, there's firings across the space in tech, except for hardware, and NVIDIA's hiring. But otherwise, so that's something we in the near term, it could be painful, but we all have to think and be disruptive, just like we've seen on the car side, which was a crowded business. One company in the US showed us how it can be disruptive, and that's followed through with the Chinese. Same thing's happening right now with AI, the same roadmap, and I think India needs to get onto that bandwagon versus worrying about it. So to answer your question on some of the companies getting bid up, yes. You've got a closed capital market here, and when those companies and some of the platform companies are showing growth, that's great. Can they get disrupted? Yes, but they've got the consumer. They've disrupted what was historically 1 million points of presence on retail sales. That's changed so quickly. Then India's been innovative with quick commerce, which hasn't picked up in a lot of places. Even now, China's following through. We're seeing that in other parts of the world. But that's been a great opener, I think, for India. And when growth is scarce, growth is coming down. You ask me, when you look at broadly in India Inc., EPS has slowed down so dramatically, so where you can find it, people are going to chase it.
Yeah.
All right. Hi, Conrad. Always good to have you in the studio. As you've mentioned in the past, you're more bottoms up, right? And you're looking for various opportunities. I recall a couple of them that you mentioned last time around. The power infra space. I think you like stocks like CG Power, Voltam. Those were the couple of names that you mentioned. And the domestic healthcare theme as well. Apollo Hospitals was something that you liked. They've done quite well. And JB Pharma as well in the new avatar is something that you liked. Tell us what's new. What's the recent addition, say, in the last few months that you'll have done to the portfolio?
Nigel, we haven't changed that much. We generally take a longer-term view to investing. When the companies I mentioned to you, I still think they look solid when we speak on that AI side of it. We've been big proponents that power is going to be the real bottleneck globally, especially in places like the US. I think India's got, I think Piyush Goyal last night or day before night in a conference mentioned about power capacity on the grid with good reliability. I think the Voltam still look good. I know the stocks have been softer. That's going to be a very long-term play. There's going to be cycles in it, but that's going to be the bottleneck. So still look good. I think the area where I think there's opportunities, Nigel, in terms of more recently, I would say, the banking side where we all got worried about loan growth.
Yeah.
Right? Then NIM compression as RBI cuts. And thirdly, what's the asset quality? The good news is for the bigger banks, that's looking good.
Yeah.
And the stocks are starting to react a little bit, but there's still a lot of upside. You're looking at some of these on single digit, just about double digit PE terms. And even on price to book, there's been a massive de-rating. I think that's an area which to me looks a sleeper with a longer term.
You want to name a few of them? HDFC Bank, ICICI Bank, Kotak Mahindra, which one is it? Or the big boy, SBI from the PSU banking part?
I think they all look good. Honestly, I think HDFC with the merger issues now behind, I think that's looking undervalued. Axis is cheap. If you want to, it's trading a fair bit of a discount now. Kotak also is derated, but I think you've got so many picks. I'd say on the if I think of the PSU banks, SBI comes to mind as the bellwether. The numbers look good. The underlying assets and the list goals that they have are also executing really well. So that's also a good stock to own.
Talking about that anti-AI point that Surbhi and Prashant were mentioning as well, the US markets ended under pressure. If I look at the last 1 week or so in dollar terms, India has been actually an outperforming market. And as we speak, the Indian markets have moved into the green, which is good news. And tech is a sector that's actually standing out while NASDAQ has pulled back. Remember that correlation broke totally because NASDAQ did well and Indian tech, the index itself did fall apart. What do you like from the tech pack? You'll have mentioned you'll like various niche companies in the past. You want to name a few of them?
Yeah, I think we own the similar names. If you talk about and split it into in the hardware side, NetWeb is a stock we like. It's an assembler, servers. When I look at India Inc., it's not what Taiwan does on the assembly side, but it's got a long runway. It's early days, albeit. I think that looks good. I would say on the software side, someone like an Orient Pro, we still own. On the IT services side, growth has slowed down, Nigel. When we look at it, we are talking about low single digit. I think you had mentioned, I think maybe Subi had mentioned Wipro before. You're talking a margin of just, flattish growth. Yeah. And that's where you need to, you need some operating leverage here. And I think that's where there's pressure. So we don't own much on the IT service space at all. And that's been for a while.
Since we're talking, actual themes that you like in the Indian market, I think you all also invested in the EMS space, the electronics manufacturing, right? Now, these companies are absolutely going all guns blazing, and we were speaking to Keynes yesterday. Their OSAT business is coming up, and these printed circuit boards, and everybody's in them. Amber announced an acquisition on the PCB side. What do you think of valuations now here?
Valuations.
And are you still owning some of this, or have you?
We do own. I think when I look at that space, and Surbhi, if I had to rank them, Dixon's has executed over the cycle. I can go back 20 years, right? They can keep on reinventing themselves. They can do scale, right? Now, valuations aside, but they're growing, right? And I think the opportunity is huge. Keynes is moving up the value chain. You mentioned about OSAT, and some of these will come with a fair bit of capital intensity, to be fair. And to get yields up, it's going to take a little bit of time, right? It's just a natural path. And then you've got, like you mentioned, Amber is trying to break in from its old AC supply business. So they've got a good shot. There's a few interesting names as you go down the list, but I would highlight those 2, 3 are still executing. And I do believe that if you take a 3 to 5 year view, they still look solid. You have to digest the valuations that have gotten re-rated.
Okay. So on a larger note, Conrad, as you look at this market and you compare it with anywhere else in the world that you want to be, because it's life is relative, right? India was a market which got its premium for growth, like you also mentioned. But now the growth is coming in short bursts in certain pockets. It comes and stocks go through the roof for 2-3 years, and that theme fizzles out, the narrative moves on, and the market moves on. I mean, is this the new normal of investing in India? And do you think foreign investors will be okay with that? Because the rest of the market at an index level, we're talking earnings of basically 10%. Will that be enough to get the foreigners back?
I think so. I mean, how did we get here? Growth started to decelerate, and keep in mind that nominal GDP has come down, right? That's a good predictor of your EPS growth. But valuations were high, and because of how much of money that is coming into the system, right, through SIPs, that's kept the valuations up. Thankfully, a few of the IPOs have come in and put a little bit lid on the market, given how much of capital that also sucked in, right, on the IPO front. I think India is going to be the contra trade in a sense. It's a domestic economy. Obviously, we've seen a fair bit on the tariff noise that has come through. I think it's proving more resilient, but I think you've got to see the growth come through. And I think that's where India... And we debate that in our own team. I think India, Nigel, you mentioned it earlier. If Nasdaq's down, India seems to be outperforming. I think that's the way I think it plays out as such. So it's going to be much more the domestic engine. Foreigners have sold a lot. The alternatives you mentioned in a relative sense, Korea was really cheap coming into this year, and they have some great businesses. Same thing for Taiwan. So as we look out, and those have gotten re-rated. Korea's up 70% this year. So when you look now, that gap has gone. Now it's about earnings coming back, and I think that relative premium that India traded at has narrowed. So I think there's that relative opportunity now into next year. I think the setup is looking good for India, where overvaluation, maybe overowned, and earnings decelerating, and I think we're starting to base
we are at the reverse side of that trade here.
Conrad, good to hear your thoughts. And I'll tell you what, the Indian bulls, market participants will say, the bulls partied all over the world, but who partied with Santa towards the end of the year? The Indian markets. Let's hope that comes
Fingers
through.
crossed, Nigel.
All right, and wishing you a good festive season. Hope to chat with you rather soon. Thanks.
Thank you so much for coming.
Well, let's focus on the stock of this week, though. Grow. It's been growing and growing. It started off with a dip of close to around 5%. It's recovered a little bit. Float very, very limited. Let's go across to Hormuz. He's here for a quick analysis on that. Hormuz?
If you can call it breaking news, Grow is down in today's session, and
not growing.
It's almost doubled in the last 5 sessions. So of course there is some bit of profit taking that's coming in at higher levels in today's session at the start. But yesterday, Money Control did this very interesting story about the fact that there were 30 lakh shares of Grow that were pushed into the NSE auction window yesterday, and that is what analysts are describing as an unusually large quantity. Now, why did this happen? Now, some of those traders who were betting on this post-listing rally to cool off, they had shorted the stock, and contrary to their expectations, the stock, instead of cooling off, continued to move higher, and as a result of which they could not arrange for the delivery on the settlement date, and as a result of which the stock was moved into the auction window. Now, what exactly is this NSE auction window? It generally takes place between 2:30 and 3 p.m. every day, and it is for us to address situations where the sellers are failing to furnish the delivery of the shares that they have shorted. Of course, only those shares that are in the demat account can be sold, and the circuit window limit here is also 20% when it comes to price. And for auctions that fail, the exchange can close those positions at a higher price and compensate the original buyer of the stock with cash instead of giving them the shares, and thereby close that position. Now, Analysts also, Money Control also spoke to some analysts, and they mentioned that this is a technical process and the fundamentals of the stock are not impacted because of this. And also the fact that the share procured through the auction window have almost similar costs. So there is no cost differential here as well. So as of now, Grow down 5% for the first time after surging almost 95% from its issue price.
Okay, all right, Harman's got it. Thank you very much. So this is one of those rare days for Grow so far. Sixth day of its listing. It actually listed exactly a week ago on Wednesday. It was only up and away. Today, it's finding its place with a little bit of gravity setting in. Anyhow, let's move on. Talk about two more stocks. One is KEC International, which is down about 5% because of this issue the company is facing with Power Grid, and the other is Azad Engineering. Vinny's here. Vinny, let's start with KEC. What's troubling the stock?
Hi, so absolutely, like you mentioned, right, the issue that's come up with Power Grid, where Power Grid has actually barred the company from receiving any of their tenders or orders for a period of 9 months. This is going to be starting from November of 18th. The main reason for this was alleged transgression that took place of Power Grid's contractual provisions, and there were some arrests made as well. This happened in March 2025. So concerns around this, and that is why Power Grid has barred KEC from getting any orders or tenders. Now, the company in their release has said that they don't see any impact on the work that is already under the execution of with Power Grid in terms of their projects. But let's look at the details now that are coming in. One, when you look at the tender pipeline in Q2 FY26, that was at around 1.8 lakh crores. Of this, the T&D, that is transmission and distribution pipeline, is at 65,000 crores. In that, domestic comes in at around 25,000 crores in T&D. And do not forget that Power Grid is one of those major companies for KEC International in terms of clients. So, that is a major impact that would come in this number which we're seeing of domestic order pipeline. Because what the company has said in terms of guidance, 30,000 crore inflow by FY26. Now, will it affect this guidance of theirs for order inflow if, they're barred from KEC, Power Grid's order intake that will come in as well. Overall, order inflows also are at 39,300 crores. Around 15% seems like is the order inflow that is coming from Power Grid. So that is important to watch out for. And those will be the key questions that we look to ask the management, what it means in terms of outlook, as well as how they see this moving going forward in terms of impact as well. So KEC, that is why we're seeing that fall. Now, other than that, Azad Engineering, positive news flow coming in here. They've signed a contract with Pratt & Whitney for development of and manufacturing of aircraft engine components. Time period is a long-term agreement. Exact time period is not mentioned or the contract value, but a big order win there, and that is why the stock is in focus.
Okay, all right. Thanks a lot for that, Vinny. From Vinny, let's go across to Vinity Organics. That's the next management on the show. The company reported actually a mixed set of numbers. Lower input costs led to strong margin expansion. To discuss the past quarter and more importantly, the way ahead, we have with us Vinity Saraf Mutrija, the Managing Director at Vinity Organics. Hi, Vinity. Always good to have you on the show. Thanks a lot for joining in today. Well, let's focus on the way ahead. And you have mentioned in the past, over the next 3 years or so, you're looking at a 20% CAGR growth in terms of revenue with margins in the vicinity of 26-27% or thereabouts. But let's talk about this year first. How confident are you of that 15% revenue growth that you were talking about for FY26? The first half of the year has been a mild growth out there. So that's why I want to understand for the year, what kind of revenue can you do? And also margins, first half of the year, you've done well out there. It's closer to around 30%, but still you're talking about 27%. So guidance on both these two parameters.
Sure. Good morning. See, when I say revenue growth, I think I should correct myself and call it volume growth. Because revenue is a function of volume and price. And so while year on year and quarter on quarter, we are seeing volume growth of our products, especially coming from the new products, the additives business, as well as from our subsidiary, as well as ATBS. Now we have started the new line, which just got commissioned a few weeks back. So given all of that, we've seen volume growth. Of course, the prices of raw materials have fallen, freight prices have fallen, which has also led to a reduction in prices of my end products, and hence you see a margin expansion as well. So it's actually been a very good set of first half or good Q2, and looking forward to Q3 and Q4 as well.
Okay, so, so just to revise that, then for this year, if you could talk about volume growth, revenue growth and margin, just to clear the air. What should the range be now?
Exactly. So volume growth remains 15%. Like I said, volume coming from our expansion, additional volume coming from the new ATBS line as well as the new products. Revenue growth Could be little less, maybe 10%, 12%, because there is a price correction given and margins, I would still maintain 27% simply, just to be conservative and since we will be entering new markets as well.
Okay, all right. Talking about expansion then, if I'm not mistaken, I think your phase 1 of the ATPS capacity has been commercialized this month itself. You could correct me on that. What is the initial volume? So there, I think the total capacity was around 10,000 tons. And the second capacity will come on stream in April. Are volumes fully booked?
That's absolutely, fully booked, at least for phase 1 is looking good. It has started, yes, in this month. And we are ramping up production since we do have an order backlog. And phase 2 is set to get commissioned around April, May 2026. That's right.
Okay, all right. So you're saying the demand is strong enough, right?
And it is a 10,000 ton expansion. You're absolutely right. That does increase our capacity by 25%.
By 25%. What will be the new capacity then?
40,000. Again, depends on which quality, but 40,000 tons, yes, per annum.
All right, let's talk about a couple of other products, the MEHQ as well as Guaiacol. They have not contributed meaningfully to the revenues. I think they were to do, 350, 400 crores or thereabouts. What did they do in the past quarter, if you could help us out with that? And what is leading to this delay, in terms of ramp up?
Sure. So, when I say 350, 400 crores, that was the overall revenue projection from VOPL, our subsidiary, which includes at least 5 or 6 products, MEHQ and Guaiacol being one of them. The other products which are yet to be commissioned is PTAP, there is Formap, Anazole we have just, is also yet to be commissioned. So it was a combination of these products. Yes, there has been a delay in MEHQ Guaiacol because we did go in with a new process and a new technology, and that is taking some time to stabilize. Having said that, we have got the quality right. Our products, our samples are approved. In fact, our trial orders on a commercial basis also we have supplied and they've approved. So next year is looking positive for these products.
Okay, and on the antioxidants part, y'all are now producing the largest amount of antioxidants in India?
Absolutely, and we are running at 60% volume capacity utilization. We've also reached profitability in that business. Okay. So antioxidant is looking good, and we are able to compete with imports, and given our backward integration into butyl phenols and IB, we do have an advantage, and the demand in India for these products is growing compared to other countries.
All right, in the past we've discussed about this Chinese threat with regard to antioxidants. And you said that maybe there could be some kind of protection as well, was something that you all were lobbying for. How are things looking as of now? Are imports still a threat? Because that Chinese, the more they produce, you always get a little bit sketchy on that front. So what are the trends you're observing on antioxidants?
Well, the DGTR has recommended an anti-dumping duty on Chinese products as well as products from Singapore, but the Ministry of Finance is yet to revert. So we are waiting on that.
All right.
So if that comes, then that will be a very big positive development, yes.
All right. And as a percentage right now, are Chinese imports still coming in?
Yeah, they're absolutely coming in. We are servicing probably about 40% of the domestic demand, and imports are coming in from China, Singapore, Korea.
Okay, all right. So if it comes in, then definitely it'll be a positive, because I think antioxidants as a percentage of your overall revenue is low teens. It's around 11-12%. Could you tell us, how do you expect this to scale up? What is the percentage contribution from antioxidants to the total revenues? And
well, you're absolutely right. I'm surprised you're getting the numbers so correct.
No, Vinati, I normally get it right, yeah. but correct me on those numbers, with regard to how do you see things panning out?
No, you're right. AO is right now 11 to 12% of our revenue. And if things go as planned in the future, that could go up to 15-16%. Again, because the other products ATPS will also contribute to our revenue growth.
Okay, all right. Got that, Vinati. Good conversation. And I think you've told us in the past that US tariffs is not really hurting you all, right, as of now?
That is correct, because my major export to the US is ATBS and related products, which is under exemption.
Okay, Vinati, you've given us a fair idea about business. How do you see things pan out? And as you've mentioned numerous times, 20% revenue growth is what you're looking at, for the next 3 years on an annualized basis, with margins closer to around that 26-27%. Wishing you a good day ahead, and we look forward to having a chat with you, Vinati, rather soon. Thanks for joining in.
Thank you. Bye.
Well, time to slip into a short break. On the other side, Vishal Kampani of JM Financial will be joining in from the conference, JM Financial India Exchange 2025. Prashant will be in conversation with Vishal.
Welcome back. Well, I'm sitting down with someone who's right at the top of the deals table. Vishal Kampani of JM Financial is with me here right now. We'll talk everything macros, markets, deals, not just the India-US deal, but of course also all the deals which we're seeing in the capital markets. And of course, we'll sort of wind down with a view on JM Financial as a stock, as a company, which of course has done very well as well. Vishal, thank you very much.
Thank you.
This is day one of the conference.
Absolutely, and we're very excited.
Yeah. What do you expect to sort of, you think will be the dominant theme here this time?
So I think there are lots of themes. One is India very clearly is one of the dominant growth engines in the world. And investors are very interested to hear what's happening in India. And, if you have a longer term horizon, which matters, 3 to 5 years, there is no question you won't spend time on India and understand the growth prospects here. And also this time, in the last 5 years, we've seen almost every sector having outperformance. It's not about making a bet on IT services or banking. We've seen growth across sectors. So it makes it a very interesting and exciting market.
Last 1 year has kind of been strange because there's a bull market in so many pockets of the market, so many stocks, but no bull market as far as the index is concerned. Is that the right way to characterize it?
Yeah.
It doesn't feel like the market is going bonkers with gains at an index level. But stocks?
Yeah, I think, the disappointment has been in earnings growth. I think the expectations last year were around maybe a 15-16% kind of earnings growth. And the number is closer to 8 or 9%. Right? So there has been a bit of a disappointment. And that is a primary reason, I think, why you've seen FPI selling. Right? So it's more of earnings-driven selling. At the same time, you've had massive buying from mutual funds, all led by retail inflows through SIPs into funds, which has been able to sort of sustain the index where it is. So in fact, without that, markets could have been lower this year. But again, as I said, the word is horizon, right? What's your horizon? If you're really a long-term investor, which retail in India is proving to be a smart investor using SIPs. Taking a long-term view on equities, your returns will be very good as long as the economy is growing at 6-7%.
You think we should, that statement, which is retail has been the smart money, we should preface that statement with the question, only time will tell, or no?
Of course, no need. Time will tell, but when you see, do you see any big macro risk in India, right? No, it's hard to tell. Look at corporate balance sheets, right? Completely de-levered. Right? You look at India government, right? You don't see any macro risk. There's stability. Foreign exchange reserves are almost 700 billion, right? Consumer, there are parts of, the sector in consumer which is slowing down, but it's also slowing down because of competitive intensity, right? Yep. So I think, leverage in the retail or the individual segment is not that high. So there is no real macro risk that we worry about, right? Our banks are strong, our NBFCs are strong. So the financing, the credit side is strong. So where is the downside going to come from, right? And full credit to the government. We did not do any kind of, overspending during COVID. No kind of distribution of money at the center level, right? So I think full credit, and that's why you're seeing the strong macro balance sheet.
But earnings growth has to pick up, right? I think this will be the third year where nominal growth is under 10%. So that's got to pick up. And hopefully that will, with all what has happened.
Yeah, I think, so somewhere you've also seen a bit of a reset post-COVID. You've seen many sectors fly during COVID and do very well. And you're seeing a bit of that reset in terms of earnings. Maybe seasonality is coming back, right? So many of these factors are coming together, and therefore you've seen that over the last 6 quarters or so, you've seen a bit of a decline in earnings. But I think as a house, we are quite positive. I think next year, which is 26, 27, you should be seeing close to 14 to 16% growth in earnings, which I think will able to give you better returns from the Nifty as well as some of the smaller indexes over the next 18 months.
Vishal, you guys have been part of some of the largest issuances, IPOs, secondaries, blocks, I mean, everything basically, right? The level of activity is unprecedented. Now, the argument sometimes which is made, and I think it's right, that it's still the question, what came first, demand or supply? All the supply would not come if there was not enough demand to absorb it. But at some level, you've got to ask the question whether this is almost an en masse transfer of ownership to retail in that sense, right? And all this selling. How do you think about it?
Yeah, I would think that today India is in a place where we have a lot of different pools of capital operating at the same time, right? So where is this surge of IPO activity coming from? It's largely coming from the investments of private equity. You see, last 6-7 years, we've got almost $350-400 billion of private equity inflow into the country. Assuming these smart investors want to grow their money at 15%, right? Over the next 5 to 7 years, that's almost $800 billion to $1 trillion of exit value if these companies have been able to grow at 15%, right? So, and a significant portion of that, maybe 25 to 30%, right, will find exits through the capital markets. Some part of that will be a private equity to private equity transfer.
Sure.
You've been seeing that, right? You've seen some home finance companies which have changed hands within the PE universe itself, right? And another 1/3 could be strategic M&A.
Sure.
So there are lots of pools of capital.
Although strategic M&A has been kind of, it's not that large, right?
No, it won't, because the multiples are very high right now, right? So people would prefer to invest in their own capacity than buying. Having said that, there's almost $50 billion worth of deals that have happened year to date. So deals are happening.
So if you divide these three, look at these three categories of, I mean, the way to monetize private equity, early investors, etc. The top one, the biggest one is IPOs.
Of course. Right now is IPOs, but you know, I'll tell you what happens is when you return capital back to these investors, they will come back with more.
Absolutely.
So they will invest again in younger enterprises, newer companies, and that will fuel another growth, right, for the IPOs and the secondary markets over the next 5 to 7 years.
But you just said that strategic M&A is not happening as a way to exit because multiples are too high. That multiple, I mean, all this stuff is being bought by retail at those multiples at the end of the day.
No, I think what's happened is a couple of things. Indian corporates have become careful in terms of doing M&A. You see, the returns from M&A generally in the last 15 years have not been great. So Indian corporates who are buying also have high multiples. So that kind of defeats the argument. I mean, if I want to buy a company at a higher multiple, if I'm trading at a higher multiple, I have the currency to pay for it, right? But people are saying on the absolute side, if I'm paying 25 times earnings for something, am I really going to make those returns? So which is a very conservative and smart way of looking at it. Having said that, there are lots of sectors where you can find value, right? I mean, you've seen banking. I mean, I was amazed to see that, RBL raised more equity, right, than their net worth, and from a, UAE player. So, which is a very interesting transaction. And I think it redefines the way we look at our banking sector in India. This is actually control transfer of a bank to a foreign bank. Which has not happened.
60%?
Yes,
no, 60%.
And an open offer.
Yeah, an open offer. So you sit down next opposite lots of promoters and private equity, etc., who want exits. Just give us a sense of how those conversations are going right now. I mean, is there willingness? I mean, who's pushing? First of all, our valuations, on average, I know it's very difficult to make generalizations. Some are high, some actually leave a lot on the table.
Yes.
But are you generally okay, all right? And how do those conversations go?
I would think it's more sector specific. I would think in the new age space, maybe people have to be a bit careful. What I fundamentally don't understand sometimes is that stocks trade up a lot higher post IPO, and they weren't necessarily priced very well during the IPO. So secondary market investors have to be careful buying stocks which have done extremely well post-IPO when the IPO itself wasn't considered cheap. That's number one. But generally, if you see, again, domestic mutual funds, I mean, I tell you, they've been very smart about making investments. I mean, they're not paying up for anything. They're being careful. They're looking at very conservative ratios like PE multiples as well. Not just getting carried away with EV to EBITDA multiples and adjusted EBITDA multiples. And so generally, I think the entry price, again, from a 2 to 3 year horizon, is not expensive.
Do you think that this phenomenon of companies doing very well immediately post-listing is also because a lot of the anchor, etc., is locked in? I mean, all that supply is out of the market,
absolutely.
right?
Good point. Yeah, absolutely. So there's no supply.
There is no supply.
Yeah, so you'll really see how some of these gains which you see post-IPO, how they play out post a 30-day, 90-day and a 6-month lockup.
Yeah.
See, one thing I'll tell you, one has to understand that in a promoter-led company, you're not going to see the promoter sell his stake within 5 years. So as I said, 350, 400 billion private equity invested. That's almost 800 billion to $1 trillion of exits. These exits have to happen. If they are listed companies, strategic sales are complicated. They're easier in privately held businesses. So the float that will come to the market in some of these companies is going to be very large.
Sure.
Right? And that can dampen stock price movement for a very long time. Right? You can see 2 years or 3 years of prices being almost flat. Even though results are great and earnings are great, just because you have 70% of a company that's up for sale.
I know you can't sort of write down this as a rule for everything out there, but generally speaking, would you say, and I'm asking this and you're a banker and a deal maker, for viewers who are watching retail, etc., it's a good idea to not generalization overall, but as a mental makeup. Give it time. I mean, new listings. Give it time. I mean, once these lock-ins, etc.
Absolutely. Please give it time. Don't rush in day one to buy new listings. Just hold off. And retail investors in India are way better off investing with some of the marquee mutual funds in the country, and they will give way better long-term risk-adjusted returns than trying to do it yourself.
That's a very safe statement, Vishal.
No, but that's true. I mean, see, end of the day, India has growth. Yeah, but India can have potential risk. You're not seeing it today.
Yeah.
Right? And if you have smart managers who are managing your money, why not just allocate it to them?
Yeah. And the pipeline itself, Vishal, I just want to ask, is it as huge, as large, as strong?
This is our strongest and biggest pipeline in the history of the firm. It's unbelievable.
So how many deals are you doing a month?
120,000 crores worth of filed IPOs.
Yeah.
So which is a big number.
And how many is JM doing every month? I mean,
our market share is between 20 and 25% of the market. So if we have close to, say, 120,000 crores of filing, the market potentially has between 3 to 4 lakh crores worth of transactions. So to give you some figures, year to date, 1,52,000 crores has been raised.
IPOs.
And last year was 1,54,000 crores, 1,55,000 crores. So we will beat last year. There is a chance that next year we could double this number.
Wow.
Yeah, okay. Because there are some very large IPOs which could come next year.
I mean, the big one, of course, is potentially NSE. Which
absolutely. I mean, that would be a very large and a very exciting IPO.
Yeah.
I think it'll be the most exciting IPO.
Yeah. Vishal, we're going to continue this conversation here, but for our viewers who are watching, I'd just like to toss it back to the studio. Nigel, Surabhi, back to you guys while I continue this chat here.
Okay, absolutely, Prashant. I know it's a very interesting conversation that you've been in the midst of. So very, very interesting. Vishal Kampani saying that retail investors need to be careful. Let these new listings settle in the secondary market, because the truth many a times is revealed only after those anchor lock-ins end, when those big investors, their lock-in periods are over. So we'll see some words of caution coming in over there from Vishal Kampani.
The new listing as well did come up, Tenneco. Good listing, 25-30% uptake in comparison to its IPO price, and the IPO wasn't priced cheap. We'll speak to the management in the next 30 minutes or so, but a solid listing is what we are seeing. And, Surbhi, by the way, yesterday, when we started closing bell, I was talking about Bhav Bhagwan share, right? With regard to Grow.
Yeah.
Because, the price was up. Today, Bhav Bhagwan share again.
10% down on Grow. Yeah, and this is what we were discussing in closing bell, that when something moves at this pace, 100 becoming 180, and absolutely the street has been very positive on the fundamentals of Grow. Most experts have been. But sometimes the price can create certain optical illusions as well. Anyway, that's technical. We should pull up Grow because Grow is the one that has been the headline of the market in the last 5 trading sessions. Can we get the Grow stock price up? Okay, I think we'll get it up in a bit. Right now, Grow is down 10%. Yeah, so there it is. So let's see how it settles. The story that Money Control put out is also an important one, that there have been a lot of short sellers who then simply couldn't fulfill their short selling obligation, and therefore Grow shares moved in the auction window. So there are a lot of technical factors at play as well. Let's see finally when some of these technicals settle and the real discovered secondary market price of Grow will be upon us. It ties in with what Vishal was saying. Sometimes you just need to be patient to come to the real price which the market is ascribing to a new listing. All right, on that note, let's quickly hop across to our technical expert, Siddharth Rai. Siddharth, what are your trades?
Hi, Surbhi. Good morning, and thanks for having me on the show. See, Surbhi, can I give me my perspective on the index first of all? Surbhi?
Yes, Siddharth.
Yeah.
Please go on. The index view and then the trading calls.
See, if we talk about Nifty, Surbhi, despite all this pressure coming in from the global markets in this week, we have seen Nifty very nicely respecting 25,900 as a support. So interestingly, 25,900 was a resistance till last week for the index. So now I do think since the supports have come upwards, it's a very good idea to stay bullish in Nifty, though we are consistently facing resistance around 26,000. But we have to stay bullish in Nifty because eventually I do think that Nifty will be going past about 26,000 probably in the next couple of sessions. And once we do, we'll see a very quick up move towards 26,150 and 26,200 levels. So Nifty's structure is very bullish right now. And if somebody has an existing long positions, they must continue to hold it in the index.
Okay, and individual stock calls?
Yeah, sure, Nigel. Hi. See, 2 stocks, both of these we have to buy. The first one on my radar is Coforge. See, we have seen a very good breakout in today's session. Probably it was not the move was not very interesting in the last couple of sessions, but today the stock has come back about 1,800, so it looks good to buy. Coforge can be bought right now. The spot is trading around 1,819. Our stop loss will be at 1,805, and the targets being the first target 1,860, the second target 1,875. The second stock is Scient. See, it's a classic turnaround story. Today's move is a very good turnaround, candle, and it can be bought right now. So right now, Scient spot is trading around 1,149ish. We can buy it here. The stop loss will be 1,130, and our target being the first target 1,185, second target 1,199.
Okay. All right, Siddharth, we'll leave it on that note. Thank you for the trading advice. We need to take a quick break. Come back on the other side with all the key commodity cues this morning. Welcome back. So as we've been telling you, Asia is actually looking better than how we had the Wall Street finish yesterday, because Asia had its share of drubbing yesterday on Tuesday itself. So today there's a bit of a recovery in some of these markets. Now, how long it lasts, we'll have to see. For the time being, markets like Korea, markets like Japan, all of them are flashing green, as is the Hang Seng. The implied open suggests we'll have a quiet start on the upside, but the critical question is, can the bulls really take out the zone of 26,000 to 26,100? That's where they've been getting stuck repeatedly. Well, there are several stocks in the news today, so let's hop across to Vinny for all the action. Good morning, Vinny.
Hi, good morning. So firstly, we'll start with TCS. Why? Because they've received a 5-year NHS supply deal to modernize their IT services. So obviously, this deal is positive for them. What TCS will be doing, they'll be deploying AI-enabled solutions that will help NHS supply better in terms of operational efficiency as well as improvement in terms of its IT systems as well. Next one, we'll keep an eye out on Punjab National Bank as well as Bank of Baroda. We're expecting green here for both of them. Moody's has upgraded Punjab National Bank's baseline credit assessment and adjusted baseline credit assessment by a notch up. So that is why positive for PNB and positive for Bank of Baroda, because Moody has affirmed the Bank of Baroda's Baa3 rating and upgraded the baseline credit assessment rating to a Ba1 from a Ba2 previously. So that is why positive here. Azad Engineering, green expected here as well. They've signed an agreement with Pratt & Whitney Canada Corporation for development and manufacturing of aircraft engines. This is a long-term contract. They've not mentioned the amount or even the time period of the contract, except they've said long-term contract. So we'll keep an eye out on this one. KEC International, we are expecting red here after the company has been barred by Power Grid from tenders for 9 months. That means that they will not be participating in any tenders or receiving any contract awards starting from 18th of November. That was yesterday. So red is what we could see here. Lastly, Wari Energies, that's the one we'll keep an eye out on, as the Income Tax Department has conducted some visits at its offices and facilities. The company said that they are the proceedings are still underway and they're cooperating with the IT department, but we'll keep an eye out on what comes out of these searches. As of now, red is what we could expect on the screen for Wari Energies.
Okay, all right. Thanks a lot for that, Binny. Long list of stocks you're tracking. Let's hop across to Sudarshan. Sudarshan, we saw a lot of block deals. Tell us more.
So yesterday's block deals data had some interesting names, and one thing was common. Some of the names had GQG as a buyer, and those companies include ITC, Adani Group companies, Bharti Airtel, JSW Energy, ICICI Bank, JSW Street, PFC, Sun Pharma, Lodha Developers, Patanjali Foods, all these companies. Now, was it a fresh buying? The answer is no. It was a transfer, and it was a transfer from Reliance Institutional Trust to GQG, because Reliance Trust is a trustee for collective investment trust, including those of GQG. So it's not a fresh buying done by GQG in those companies. Second block deal was in Emphasis. We know that promoter has sold shares of almost 4,300 crore. But major buyers in this block deal include Kotak Mahindra Mutual Fund, ICICI Prudential Mutual Fund, and HDFC Mutual Fund. Keynes Technology, Motilal Oswal Mutual Fund has sold shares worth nearly rupees 300 crore. And last one is Paytm, where SAF Mauritius and SAF Group have sold shares worth rupees 1,500 crore. And Society Generali has bought shares worth rupees 400 crore.
You know, the first one is interesting and important. So thanks for that. 6.5%, but you know, stock was up 6.5% yesterday. I mean, so just I don't know. Volumes were very, very large, but we'll have to see. Volumes, of course, explained, but why would the price jump is the question. But 104 now on GMR Airports at this point in time. Grow is the other one, and this is an interesting story which you know, we're going to get to you. So Hormuz is standing by with this one. Hormuz, take it away.
Good morning, Prashant. And Money Control reported about this yesterday, and they mentioned, of course, we have been speaking about Grow and the gravity-defying moves that it has been making. As of yesterday, the stock is up 90% from its IPO price. But during yesterday's trading session, as many as 30 lakh shares of Grow were pushed into the auction on the NSE. And analysts that Money Control spoke to are describing this quantity to be unusually large. Now, why did this happen? Because there were several traders who were betting on the fact that this post-listing rally that Grow has seen will eventually cool off, and hence had shorted the stock. But contrary to their expectations, the stock kept moving higher, and when they could not complete the delivery process, the settlement, and therefore the shares got pushed into the auction. Now, what is this NSE auction window? Now, it generally takes place between 2:30 to 3 p.m. every day. Now, this is to address the situation where sellers who failed to adhere to the delivery of these shorted names, and they are only, of course, it needs to be specified that only shares that are in the demat account can be sold in this delivery window. Now, the price here also is restricted to 20% circuit from the previous closing price. But in case the auction fails, now here the exchange can close the position at a higher price and compensate the original buyer by giving them cash instead of giving them the share. So that is how the settlement is done if the auction fails. Here as well. Money Control spoke to analysts. They mentioned that even if shares are purchased through the auction window, the procurement cost is relatively the same. Does not have any impact on the fundamentals of the company. It's just a technical process, and the stock will continue to react as per the market fundamentals. So as of now, that's growth. Shares got pushed into the auction yesterday. The stock continues to move higher for 5 days in a row now.
Oh, yes, absolutely. It's been a absolute rocket of a move. Gravity defying, grow, continuing to grow. Thanks for that, Horma's interesting story there. With that, let's turn our attention to the commodity markets. Manisha is here with the latest. Good morning, Manisha.
Thank you for that, Surbhi. Well, I'll start with the crude oil prices, where we've seen 1% of gains in the overnight markets. Well, a couple of things here. One, the markets are looking at Western sanctions on Russian outflows and the impact of that. The second is the U.S. president saying his administration is interviewing the next Fed chair. So there are some uncertainties cropping up because of that as well. Having said that, the Russian ports have resumed offloadings. The U.S. inventories have continued to rise as well. And there's a Goldman Sachs report which says that the crude oil prices could continue to decline in 2020 as well because of higher supplies. The only event that the prices can rise to 70 is if the Russian output actually does not find market outside. I also want to talk about the base metal prices because we've seen constant declines onto this one. If you look at aluminum, that's trading at a 1-month low, zinc at a 1-month low as well. You have nickel trading at a 31-week lows, copper at a 1-week low as well. So base metal prices, which had continued to gain in October and then in some point in November as well, finally seems to be getting in some profit taking.
Okay, all right. Manisha, thanks a lot for that. For the time being, let's hop across back to Sud. He's here to give us some brokerage calls of the day. Sud, busy morning as always.
So recently listed company LG Electronics has got the coverage. Two brokerages have initiated coverage. First one is Morgan Stanley. It has initiated coverage with overweight call and target here is 1864. That implies an upside of almost 15% from current levels. It says company stands out in many categories in a competitive consumer durables market and revenue and margin to be driven by new capacity, increasing exports and increasing B2B contribution, and believes that earnings will fall by 9% year-on-year in FY26 with 16% earnings CAGR that it expects over FY26-28. Next one, JP Morgan. It has initiated coverage with overweight as well, and here target is 1920, implying an upside of almost 19%. It says it's an attractive play on rising consumer discretionary expenditure in India and offers best-in-class superior execution, and it sees gradual improvement in growth trajectory enabled by macro tailwinds. As far as expectations are concerned, it sees revenue and EPS CAGR of 12%, 21% respectively over FY26-28. Now another comes from auto sector, that is Hero MotoCorp, which has outperformed in Q2 FY26 as far as earnings are concerned. JP Morgan has upgraded the stock to overweight and target is increased to 6,850. And this upgrade was driven by several factors. First one, market share stabilization after several years of losses. Second, improving outlook due to launches and judicious inventory management. Second, recent GST cuts have revived bottom half of the segment. Fourth, improving EV market share that company has seen. And last one is potential for a narrowing of the valuation discount that Hero MotoCorp faces against peers. Another, Deepak Fertilizer, MK, has initiated coverage with a buy and target here is 2,000 rupees per share. It says company is a leader in mining and industrial chemicals and it has plans to move from commodities to specialty offerings, and capacity expansion will help company to increase its EBITDA by almost 50% over FY26-28. Also, company is planning to restructure its businesses and to demerge some of the businesses over the next 2 to 3 years, and that will also aid value to the company.
All right. Thanks very much for that. So appreciate it. So keep an eye. More coming up in terms of brokerage calls as we go along. We'll take a quick commercial break here. Gulf Oil Lubricants, as promised, is the first corporate on the program. You'll hear from Manish Gangwal in just a bit.